Okay, so this is going to be a weekly outlook video and the current state of affairs of NQ and ES, kind of what I'm looking at and what we're looking for as far as the study group. So, without further ado, I guess we'll just get right into it. We do have news this week. So, 10 a.m. news on Monday. Always be sure to check Forex Factory if you are using any news indicators, but this is a news indicator that I had made. But Forex Factory, so my local time zone is an hour behind New York time, so just keep that in mind. This isn't the actual time. This is the proper time over here. So it is NFP week, so non-farm payroll, which is on Friday. So we want to be looking to take trades after non-farm payroll on Friday. We could expect Thursday to be relatively choppy. And if we were going to trade, we would want to trade in the AM session and get out before 11 a.m. or so. But potentially reduce risk, potentially skip this day if you're not interested in it, or if it's showing to be super choppy. But lower leverage today might be best. Obviously, use your own self-judgment. Not a financial advisor. But for Monday, we have the PMI. So 10 a.m. I'll just get rid of this and just use this because these have the actual times. So PMI 10 a.m. could see a possible manipulation and reversal. So if we're chopping around beforehand, we could hopefully expect 10 a.m. to either manipulate or expand or distribute. It's Tuesday rather, we don't have news. On Wednesday, we have some non-farm employment change in the AM. So ideally trading after that for the New York Open. I'll be trading after the 9:30 opening bell anyway. 10 a.m. again, could be looking for a 10 a.m. reversal or manipulation Friday, NFP. So just keep all those dates in mind. So to start things off on the daily chart, we'll go to the weekly in a second, but I do want to note that we do have SMT at the top here. We'll pull this over for ES as well so that we can see both. So we do have a cracking correlation between the two assets. So ES is on the left. This is NQ on the right. So the weaker asset would be NQ. I'm gonna fix this quick. All right, so I am going to go from the weekly down. One level to keep in mind here is going to be this weekly order block. Could be a potential sensitive area if we do trade up into it. On the daily, what I'm seeing, we have failed to get up to this inefficiency, creating all sorts of relative equal highs and then continued lower. Now it does seem like we are relatively bearish in the interim. We're engineering sell side liquidity here. We have massive pool of liquidity above all of these relative equal highs. We have failed multiple times to get into this efficiency and then ran lower. This area right here, which was last week, we dipped down into a discount, and we also had this OTE level where we had rejected off. So we traded down, traded up back into the range of the OTE, which this was also a daily order block here that we had hit right on the top. So coming into OTE last week, we ended up rejecting back down into a discount of the range. Something to keep in mind with premium discounts. We do have daily order block that we had rejected off of. There's also a 4-hour that we'll see lower. Here was a PD array that ICT had talked about in one of his newest videos, where you take the rollover, take the highest wick with a volume imbalance. So this is a PD array that we ended up trading back just above the consequent encroachment, and then we rejected heavily. This was the Friday delivery. So just noting why this ended up rejecting so heavily. We also have a bearish inefficiency here. So whatever one you ended up wanting to use. Okay, heading down into the 4 hour. It does look like we are in a market maker sell model here. So we had this big range here and then the smart money reversal. So this would be a previous buy side of the curve, sell side of the curve, which then we have our smart money reversal at this point. And we have our change in the state of delivery here, where we trade up. And then we end up having our change in the state of delivery again below these lows here. We trade up. We do not displace above these internal highs. We wick above, turtle souping those highs at that daily rollover inefficiency that we had just talked about. Consequent encroachment just below, and then we reject off heavily. So I do see this as bearish price delivery, where our draw on liquidity could potentially be low-hanging fruit, the internal consolidation, original consolidation, I should say. And then inevitably, or hopefully, the previous monthly low. Now, we did have this 4-hour order block on Friday that did end up rejecting price higher. So something to keep in mind as we trade this week, if we are going to be coming back up into this range here. I'll put an OTE on there. We'll go down to the 1 hour. This is our new week opening gap right here. Now, we do have this 4-hour breaker and 1 hour breaker, which is this candle here. So our 4-hour breaker, and then if you go down to the 1 hour, it would be refined here. So we already are trading above the 1 hour breaker here. And the bodies are closing above the consequent encroachment. So we will really have to see what the overnight delivery does here to see if we want to have a retracement higher into 50% to equilibrium, or possibly come up to the OTE of this range, which we do have a couple of overlapping confluences. We have a bearish order block on the 1 hour up here. We have a bearish order block on the 4 hour up here. We do have a couple 30-minute imbalances that we have inversed. I'm going to get rid of this order block here. So just remember that the full, sorry, this should be 1 hour. But the full set of candles was our 4-hour order block. So we could be looking at the consequent encroachment, which is in line almost with this, this 50% level. I'm looking for bearish prices overall, but we could see a retracement up into this zone to then have a POI, point of interest, possibly in this OTE area, or if we wanted to come higher to the hourly order block. This line here is the weekly order block line, so I would like to see us trade up to OTE, 1 hour point of interest, and then catch either an internal SMT and break in market structure, inversing a fair value gap, IFVG entry to some type of internal low-hanging fruit. I'll be focusing on 1 to 1.5 R trades for scaling out of my positions, and inevitably leaving 1 to 2 contracts on for runners. Again, I'm not a financial advisor, so take everything I say with a grain of salt and always ask a professional. We do have some relative equal lows off of the rip here on Asia Open. For my Asia, I tend to use just the 1800 Open all the way to London Open at 230. You can use the ICT kill zones if you would like instead. So same thing would apply though here with we're generating large amounts of sell side liquidity here. So to me, depending on the overnight delivery, I would like to see this remain intact as a low resistance liquidity run. Have price come up to 50% of this range, possibly OTE, hit this POI, whether it wants to get up into this weekly order block level or not, and then find some kind of closure off of an inverse that forms. So candle closure, whether you want your stop above the high or the gap, and then target a 1 to 1.5 or so, and then leave a runner on, hopefully to previous weekly and monthly lows. I would say that if bearish, I would like to see us take the previous weekly low. We did have a 30-minute that I think I briefly mentioned, but I didn't mark it out, or maybe I didn't. So candle closures above inversing this 30-minute. So we could see this act as a pretty powerful inversion, which is kind of why I'm leaning more towards I would like to see this run up higher, manipulate up during market open at this POI here or this OTE level. And it can be anywhere in here. But I would like to see this go lower just based on what price is showing me right now. If this entire 1 hour imbalance gets closed above, it is possible to see a run above these highs. Now, if we soup those highs and then use this as a second attempt to reject off of, that could be a good play as well. Overall, I'd say I'm bearish. But yeah, I'm just kind of waiting to see what price is going to tell me in the moment and kind of react accordingly. Trying to be fluid, not marrying a single bias. We do have this 15-minute order block here, something that could chop up price. We could see a little bit of accumulation in these areas, just with it being we have these higher time frame inefficiencies. We have this 50% here, mean threshold of this order block. We did reject bullish on the 12-hour. So 12-hour would be the series of imbalances. We did close below the consequent encroachment, so that is not showing superior strength for this PD array. But, you know, kind of letting price tell us what it wants to do. I do see that we're kind of squeezing here. I do like both of these for low resistance liquidity runs. A lot of liquidity. There's a massive amount of liquidity above here. Obviously for all-time highs. A lot of liquidity up there. Wow, that's really bright. I'm going to get rid of that. Holy cow. But, you know, it could go either way. You know, where we're at, it could go either way. It's the beginning of the year. I'd say try to be fluid and let price show you what it wants to do, but be aware of the PD arrays that are surrounding the price action. I'm leaning more towards being bearish, but again, in the moment, you know, price is going to do what it's going to do. We are, you know, coming up above this hourly breaker. This would be our change in the state. For this retracement, we displaced above here. We didn't use this as support to displace above these internal highs, remaining in flow with the market maker sell model on the higher time frame. I would like to possibly see this internal consolidation be our low-hanging fruit. And if we were going to go lower, the inevitable original consolidation for the full market maker model. But that's a pretty big ways away. That might not happen this week. We might end up seeing a rally here coming above highs. I mean, that's how it goes with trading, right? It could either go up or down. There's really no definitive way to know if there's going to be if there's going to be any manual intervention with any news releases or anything, but we do have the PD array matrix that we can use to frame our ideas of how price might deliver one way or the other. And with that being said, I'll end that here. Overall, I am bearish, but I'm going to wait and see the overnight delivery and what price is doing. So yeah, first recap video. Hopefully this wasn't too painful to listen to, but just a few of the things that I'm looking at going into the week. Ideally, I think doing these on a regular basis is going to be really good for me because it'll help me hone in and learn even the things that I'm thinking about better. By getting the things in my head and speaking them out loud, I do think that that is a valuable tool for processing information in our own heads. So thanks for watching, and I will see you guys in the next one.